Welcome back, guys. This is going to be a video about order blocks. And I didn't write down any notes, any kind of scripting. So I'm not going to edit this video either. So you'll just have to, it's going to be off the cuff. So what we've got here, I'm going to show you what order blocks look like. And like I said, I have nothing picked out, no notes, no scripting. I'm just gonna talk and scroll through the charts, and we'll find some stuff. So, order blocks are changes in the state of delivery of price. Order blocks are called CISDs. Now, there's a couple different kinds of order blocks, and there's different categories of order blocks. You have order blocks, and then you have rejection blocks, breaker blocks, mitigation blocks, propulsion blocks, and all of like the sub order blocks. So I can try to find some of those, but I can certainly show you order blocks. And one example is right here. We'll just get right to it. So these two down close candles, am I zoomed in enough? Those two down close, so we're coming down in price. And those last two down close candles before the up move is an order block. What is nice about this order block is it's got a rejection wick on the bottom end of it. Somewhere over here, it came into some kind of liquidity. There's a fair value gap right here. Lines up perfectly with it. See, respected that fair value gap almost to the tick. So once this happens and then price comes back up and closes over the high of the body or the body of the first candle of the order block, it's now an order block, which means it'll be respected if tapped in the future. And ICT will say and teach that sometimes price can come down as far as 50%, which is mean threshold. And that's fine. That's still respecting the order block, just like consequent encroachment of a fair value gap or something like that. So you can see that nothing came down that far, which is great. You don't really want it to. You want it to respect, as perfectly as highly up as possible. You can see price came back in it, and then off we go. It actually came back in it over here too. Look at that. It respected it by a wick, like it didn't come in and disrespect it at all until we went from a buy program to a sell program. So after that, it doesn't matter. Now, that's a significant order block. And it doesn't have to be, what am I on the 5 minute? So it doesn't have to be multiple candles either. Let's go look at this on the 1 minute just to see what it looks like. I have no idea. There it is. So it's definitely not as clean on the 1 minute. Honestly, what I probably would have done is, if I were to see something like this is the order block, and this is a fair value gap just above it to kind of help support it, which it does. But order blocks happen all over the place, and they're not always respected every time. The more significant ones are, especially the ones that take liquidity as they come down and then you trade away and it makes the order block. But even this guy, this last up close candle before a down move, once the down move closes below that, that's an order block now. Let's see, it gets tapped into and respected there. I mean, I'm at after market hours here, so, but that's an order block as well. Let's go to like some regular market hours. So this is probably good. This last up close candle before the down move is an order block. Typically, I like to just use the bodies. If they're really, really small wicks like this, they're not the significant wicks of any kind, just use the body. You can see we traded back up into it and respected it. So this last up close candle before the down move is an order block. Let's see. Here's another, I mean, they're all over the place. Here's another example. The last down candle before the up move displaced nicely and closed above it. There's a very small wick, so it doesn't matter. And price comes back down and respects it perfectly. It didn't last long, but that was where the algorithm wanted to go. But you can use them to frame your trades and to help you kind of understand, okay, if we're in a significant downtrend, you know, order blocks and fair value gaps should be respected. Let me see if I can, I don't know, find a good run on price. There hasn't really been a good run on price. It's been really, really bad lately. This is a decent run on price. Let's draw out some order blocks and fair value gaps and stuff. So what do we got? We got the low here, and that liquidity was taken. So that down close candle, the last down close candle before the up move, is an order block. So we draw that out. There is a BPR. It's for a different video, but a BPR is a fair value gap between these three candles. Zooming in almost makes it harder. So this candle, and this candle, you get a fair value gap in there. And then this candle, and this candle, oops, make a fair value gap here. Now, a balanced price range is where those two fair value gaps overlap, which just happens to be this fair value gap. So we have this down close candle is our order block. Look at how well price respects 50%. Bodies respect it. And this BPR, bodies pretty much respect that as well. So those two things hold up. So then we trade above. So now that we've got a down close candle here and price closes above it, this is also an order block. That should be respected by future price. So we trade up. We've got fair value gap here. No fair value gap there on the 1 minute anyways. But price comes down. It retraces a little bit, a little retracement here, and then trades higher, closes above these three down close candles. That's an order block. It didn't take any liquidity, and that's okay. Order blocks don't have to, but they are very nice when they do. When they're right at the peak or the trough of a move, and they take that liquidity and then trade away, it's a good order block. It's really likely that's going to hold up, but they don't have to. They can be in the middle of a price leg. So you can see we've got the three in a row here. Again, the wicks are pretty small, so they don't really matter, but you'll see that there are some really, really sensitive levels where like the wick comes into the wick of an order block and never even touches the body of the order block and takes off. You know, sometimes that happens, but so you can see we traded above that, made that an order block, and price came into it and respected it. So price moves up again, retraces a little, and kind of does some stuff here. There's nothing really significant here. There's a fair value gap, which doesn't get fully respected. You could probably go as far as to say these two down close candles, since this down close candle was the lowest low right there. And this was not a down close candle. So this could be the order block. And that was, let's see, respected by the bodies. There. Respected right along the 50% level, mean threshold of that order block. So we can go on and just, you know, continue to find order blocks. Once there's a down close candle and an up close candles that close over it, you get another order block, and then price comes down on this candle, tests just a tick, and then takes off again. Yeah, I mean, you can find them all over the place, really. So order blocks are really nice. I like them more like this to kind of continue to stair-step price in the direction that I'm wanting to go, which helps form, you know, kind of like a market maker sell model. Oops, right here. Just helping create those stair steps all the way up and then all the way down again. I don't know what's happening, but the market is ripping right now. Can we go look at current price here? Holy smokes. I took a short right here and took it down to here. Luckily, got out as soon as we broke below this low. I don't know what happened. 320 kicked in and off we go. That's insane. It's been such a terrible day. I mean, if I scroll out, we had to open, which I caught some of that, and then it's just been barcode all day long. Anyways, let me see if I can find for you a breaker block. Those ones are a little more less common. Right here, look at that. So a breaker block is more of a price pattern that incorporates a failed order block. So let's see. It's not really that pretty. Let me find a better example that actually is not in the middle of the night that will show you a clearer picture of a breaker block. Nope. Nope, not very clear. There are breaker blocks all over. I'm just trying to find one that actually shows it well. No. Let's see. Like I said, I didn't go pick anything out before this video. Oh, this is right where we were already. I guess I could find one that's not so clean, just to give you guys an example of it. Okay, this is about as good as it's going to get for now. So a breaker block is this. You have a low, you make a high, make a lower low, make a higher high, and then come back in to the last high and take off from there. So whatever the highest up close candle is here is your breaker block. And they're usually not that easy to see, but it's part of the unicorn model, and it's a pretty strong PD array. So we've got a low, a high, a lower low, a higher high. And then we come back into, let me get rid of this now. Come back into the last up close candle with breakers. You include the wicks. I always do, especially when it's bigger than the body. So you come back into this and trade away. It's not perfectly respected, but it's not very clean price action right here anyway. So, that's nothing. I don't know if I'll find a cleaner one. Low, high, lower, low, higher, high. I mean, this is maybe better because the candle has a body. Got a low, a high, a lower low, higher high. Price never comes back to it. Well, no, it doesn't really come back to it. But that's it doesn't have to. That high last up close candle is the breaker block. Now, if there's a fair value gap that is right there too, that's a unicorn model. So that is really good for a retracement. Yeah, not really. It respected the, oh, there isn't really an order block over here either. Maybe this one. Down close candle, up close over it. But that one's harder to find. I still have to like call out the pattern in my head to see breaker blocks clearly, and I don't really use them very much. See, I still got to like draw it out even to get my head around it. Low, high, lower, low. Nope. High, low, higher, high, lower, low. Let me come back in. So this is a messy one, but we've got a high. So this is a bearish breaker block. High, low, higher, high, lower, low. And then we come back in. Dang it. To the last down close candle, including wicks, is a bearish breaker block. We'll just change it red, even though it says OB, which it is an order block. It's a kind of order block, but it comes back in, respects mean threshold too, and then takes off. So that's a breaker block. Mitigation block is essentially the same thing. They're also hard to find, where you've got a high, a low. Let me think. High, low, higher, high, but not a lower low. I got to find one to see it. And mitigation blocks I don't really like nearly as much as breaker blocks or order blocks. Oh, look at, here's a breaker block. Low, high, lower low, higher high. We come back into it. I should have seen this when I was just trading. Up close candle is the breaker. I'll turn it green or blue just so you can see it. Comes back down into it with an overlapping fair value gap inside of it. There's a unicorn model, and see you later, alligator. So there's that. Mitigation is like, let me get rid of this. Mitigation is like this. It's a low, high, higher low, higher high. So it doesn't make that lower low. High, or a low, high, higher low, higher high, and then comes back into it. So kind of like that. Propulsion blocks are basically double stacked order blocks. I'm going to try to find one. It doesn't get traded into, but there is a propulsion block here. So we've got a down close candle, up close over it. So that makes that down close candle an order block. And then we retrace into it, up close above it. So we've got another order block. This is a propulsion block. It's pretty typical. Price doesn't come back to them. If it does, it'll be like the next candle and it'll wick in and take off. Propulsion, it's called propulsion for a reason. So if you see them, just market entry like right here. Get in because it's propelling off of the reaction from the original order block, and it's closing above this. I mean, you got a brick wall here now, really. So you can wait for the wick in, and then just get into it. Just get into the trade. It's going. I really like propulsion blocks. Let me see if I can find one more example of that. Maybe on the downside. Yep. And price does come back to this one. So we've got up close candles before a down move. The down move closes over the up close candles. So we've got an order block. The next candle comes into it. And then, the next candle closes over it. So we've got another little order block. They are stacked order blocks. That is a propulsion block. In this case, the wick is bigger than the body. I would use that. Honestly, I'd probably use the wick here too, because it's bigger than the body. And price does tap it. It ain't getting through. Off it goes. I mean, it was a choppy day, but it respected that very well. So propulsion blocks are pretty nice. Not going to lie. I like them a lot. Rejection blocks. I wonder if I'm going to find a rejection block. They're pretty rare. And they're usually at the very peak or trough of a move. And they're rarely ever traded back into. Here we go. This could be one. It kind of gets respected a little bit, but price wanted... That's only like a tick, but price wanted higher prices. So the top wick of buy side, like that, is a rejection block. When price comes back up to it, it gets respected and trades away. I mean, this is 30 to 20. That's 10, 15 points of rejection off of that. So it kind of worked, but kind of not really. You could probably even classify this as a rejection block. Just a big wick at the bottom or top of a move. Price came into it twice and it couldn't make a new low and off it went. I also had a whole bunch of strong draw of liquidity up there, but this is a little bit of a cleaner example. We're at the peak of a move. We're rejecting something. So that's a nice kind of confluence. We leave a big wick at the top. You draw that across. Price comes into it and rejects that area. And in fact, you can use it just like any other block. It does respect, doesn't even get to 50%. So you can use it just like that too. So that's a rejection block. I think I got them all. We did order blocks, breaker blocks, mitigation blocks, kind of propulsion blocks, rejection blocks. I think that's really it. It's actually, it's more simple than you think. A lot of people overthink it. How many candles do I use? Like there's 4 up close candles here. Is the whole thing an order block? Not on this time frame, but so like it's still pumping, dude. That's so insane. Anyway, you've got this candle that got closed over immediately. So there's my order block, that up close candle. And the wick is the highest, or the wick on that candle is the highest high. So that's nice too. On a higher time frame, which I'm not going to go to because then I have to like re-scroll the whole screen. This could be 2 candles and it gets closed over, by, let's just do it. I'll show you. We'll put a line there. And go up to, let's go up to the 2 minute because it'll be close by and see what it shows. Still, see how a couple candles must have combined here because a 2 minute order block would be here. Got an up close candle, down close past it. That's the order block. Again, we might be able to combine some of these candles and make this whole thing an order block on the 3 minute. Am I going the right way? I don't think I'm going the right way. Is it this way? Nope. Took me all the way back to current price, I think. Yep. So we combined some more candles and made this an order block on the 3 minute. So it really just depends on we could probably even go further, and these last two will get combined, and you'll have a 5-minute order block. You see what I mean? So like as you go up in time frames, it's just the last up close candle that gets closed back over again that makes it the order block. Technically, the whole thing, probably all the way down to here, is the order block. So again, depending on the time frame you're looking at, price may only come up to this far and not come all the way up to the 1-minute order block. In this case, it went up to the 2-minute. It never came up. Oh, it did. Came up to that 1-minute order block beautifully. Look at that. So you can see it just depends on where the algo is going at the time. You could have got a little scalp off of that, a decent move off of that. And it continued lower actually all through the night if you're an overnight trader. I don't know why I end up looking at after market hour candles here, but the market hour candles have been kind of a wreck lately. So yeah, that is insane. Honestly, I was waiting for this bullish move almost all day. This is just going to add to the video nonsense, but I was watching this on 1-minute time frame here. There's a 15-minute fair value gap back here. Is this the one right here? Nope. Oh, that's S&P. I'm drawing on my other screen on the left. Anyways, there's a 15-minute fair value gap up here. So I was watching. Price was nicely stepping its way up. Hit that. We had an SMT up here. No, we didn't end up having an SMT up here. Yes, we did, actually. ES went way higher. Took out a way higher high. NQ was weaker, and it couldn't get past this new week opening gap and the 15-minute fair value gap that I had drawn here. And it just took off. Now, normally market maker sell models have some retracement and stair-step their way down, just like they stair-step their way up and make kind of a nice arch. This one just melted. But what I did was I'm not logged in. I can show you on my other screen probably. Yeah. Right here. So what I did was I waited, saw that this was making a 1-minute BPR right here. Closed, made a 1-minute BPR. Next candle, traded up into it. I sold right there. And then I don't know if you guys have used Apex lately or Tradeovate or even Elite Trader Funding. They all go through Tradeovate. This got all jacked up because their fills and their scaling, like all the fills are bad. So I'm trying to scale and I'm trying to add on my way through here, and it's all delayed by 5, 6, 7 points. You know, I use micros right now, and that is luckily only a few bucks. But if I was on minis, man, that's hundreds of dollars of slippage. And I've been testing it for this. This is the third week that they've had the issue, and Apex is denying it. Not to rant in this video here, but I ended up switching to logging into my Elite account instead of my Apex account. Perfect fills. Perfect. I went on Tradeovate and made a couple of executions. Perfect fills. Not a problem. Go back to Apex. Laggy and delayed. They're denying everything. I'm not a fan of Apex right now. But just because of that, I love Apex for everything else. And I've got a ton of accounts with them, and I'm not going to get rid of them or anything. But I will always recommend them. Something's just going on with, I don't know, their servers or something. And so it screwed up my whole trade is all I'm trying to get at. Screwed up my whole thing, but I did catch a couple of chunks out of there. So that was great. A couple of break evens here, trying to catch the bottom or the beginning of the market maker sell model. And I just kind of broke even here, which is fine. Caught some good moves down here. So where are we at? Is that good for order blocks? You guys need more examples? Let me know. Otherwise, I recommend watching ICT's videos about them. There's other people that make videos about order blocks and they all teach them wrong. It's common anyways. I won't say all of them, but there's a lot of wrongful teachings in order blocks. They're really simple. They're really simple once you kind of see what it's about. So even this one, because this is a little bit different, we got up close candles, but they don't make the high. That's fine. Totally fine. This candle still got closed past, and it is still an order block, right? That's fine. I can't believe it. I think we're still pumping. I just want to watch this. All right. Well, I think that'll do it for that video. What do I have next? Setting up trade copier and then a kind of a top-down analysis. I will say the top-down analysis really is going to depend on what strategy you're using. But we'll kind of go through just a universal, general top-down analysis on the next video. So, all right. Anyways, comment any questions or whatever. And check out Apex. Their sale actually, I think, just ended or is ending today. I'm pretty sure they're going to be having a new sale soon. And for Easter, I'm hoping it's a 90%er. So my code is in the description and buy some accounts. They're great for practicing. Better than paper trading, because if you do good, you actually get to convert that into a funded account and actually make some money. So check that out. Thanks for watching the video and have a good one.